My name is Sullivan Short, and my corporate analysis is on the Walt Disney Company. So, a brief overview of the company is Walt Disney founded the company in 1923 with his brother, and they previously did basic cartoon drawings and various things of that nature. But Walt wanted to go a little bit farther and get his cartoons featured in film, which he did do that and worked for various publishers and cartoon artists to do a few small films that we know of today. And then the company grew in 1955, opening their first Disneyland park in California. And it is just like anyone would picture Disneyland would be, including rides, attractions, food and retail shops, and featuring the famous characters that Walt Disney came up with. And so now Disney owns 12 parks all over the world. Bob Chapek is the CEO since last February, and Christine McCarthy is the Senior Executive Vice President and Chief Financial Officer. So financial analysis ratios for the year of 2019. So the debt ratio, which measures financial leverage, is $273.22 for Disney, which is the total debt of the company, which was $53 billion in 2019, divided by the total assets of the company for the same year, which was almost $194 million. The current ratio, which measures liquidity for a company, is 6.8. And this is by dividing the current assets by the current liabilities, which for 2019, Disney's assets were almost 194 million, and their liabilities were a little bit over 31 million. The quick ratio, which is how well a company can pay out outstanding liabilities, which is given from dividing the current assets by the current liability, which was 83.23% for Walt Disney in 2019. And finally, the net profit margin, which measures how much each individual dollar that they get contributes to the profit and how it affects expenses, which was 108.24%. Their common stock is, for 2019, was that they had 4.6 billion common shares of authorized stock with 0.01 par value, and 100 million preferred shares at the same par value. Their common stock trends have been in the positives and tend to rise gradually, and that's been a normal trend for them throughout the decades. Volume of these stocks range from a little over 28 million as the high to a low of almost 6 million for the 2019 year. They have 8 stock splits, and their common stock beta, which measures a company's common stock price validity relative to the stock market, and Walt Disney's is 1.21. Their preferred stock and their bonds their preferred stock is 0 million, but their enterprise for the last quarter of 2019 was 368,546 million. And then their book value per share was $47.20 for the last quarter of 2020. And there wasn't a lot on Walt Disney's bonds, and there usually is bigger companies rarely take in bonds, but I did find that they have in the past they've issued 100-year bonds, but they rarely do that in the present day. A stock valuation, their PE ratio, which is the ratio for valuing a company that measures current share price versus its the per share earning. So their PE ratio was a minimum of 12 in December of 2018, a max of 43 in June 2020, and then the average between those years was 18.18. The PEG ratio, which determines a stock's value, with also with the company's expected earnings growth also contributing into that. And for Walt Disney, that was 12.61. And then the PS ratio was a minimum of 1.992 in March 2020, a max of 6.032 in March 2021, and an average of 3.215, which the PS ratio compares a company's stock price to its revenues. So if I had to look at this company's stock trends and just their overall characteristics as a company, I would buy, especially given the evidence that they've given the past year and the pandemic. In February of this year, their share price jumped to 58%, and they also have utilized a great deal of their resources in letting states use their parks as vaccination sites. So I think that they are really using the pandemic to their advantage. And an article from Forbes in 2019 says that in the past 3 years from 2019, Walt Disney stock went up by 40%, which obviously this past year it has gone up by 18 more %. And these are my references.